Imagine selling your silver years ago, putting that money away, and thinking the situation is completely finished. You filed your taxes, time passed, and you assumed the IRS window was closed. But what if that assumption was wrong? Many silver owners believe the IRS only has 3 years to review a tax return. And while that rule is real, there is another rule that can extend that timeline much longer. In certain situations, the IRS may have up to 6 years to investigate missing income. That means a silver transaction from years ago could still become a question today. This is not about creating fear. Many people who face these situations are not criminals or trying to hide anything. Sometimes people simply did not understand the reporting rules, especially when they sold physical metals privately or through a dealer. The important thing is knowing how the rules work before a problem appears. Before we continue, remember that this video is for educational purposes only. Tax laws can change, and every situation is different. Always speak with a qualified tax professional about your own circumstances. Now, let's break down what silver owners need to understand. Most taxpayers have heard about the 3-year audit period. In simple terms, the IRS generally has a limited amount of time to review a filed return. But there is an important exception when the IRS believes a significant amount of income was not reported. That normal timeline can become longer. The key question is not only how much profit you made from silver. The bigger question is how much total income was left off your tax return compared with the income you reported. This difference surprises many people. For example, imagine someone reported $50,000 of income in a year and later the IRS discovers another $20,000 connected to a silver sale that was never reported. That missing amount may create a much bigger issue than the person expected. Many people also assume that selling silver for cash means there is no record, but modern financial reporting does not always work that way. Precious metal dealers may have reporting requirements depending on the type and amount of metals involved. Certain transactions can create paperwork that eventually connects back to tax records. A person might sell silver today, forget about it years later, and then receive a notice asking questions about an old transaction. The reason this can happen is because government systems compare information from different sources. If a record from a dealer does not match what appeared on a tax return, it can create a mismatch. That does not automatically mean someone did something wrong. It simply means the IRS may ask for an explanation. Another thing silver owners should understand is that the tax impact is not always just the original amount. If the IRS determines that taxable income was missed, additional costs may apply. This can include unpaid taxes, penalties, and interest that grows over time. A small mistake that seemed unimportant years ago can become much more expensive if ignored. This is why waiting and hoping the issue disappears is usually not the best strategy. Now there is another situation that is very different. There is a major difference between an honest mistake and intentionally hiding income. If someone simply misunderstood the rules, that is one situation. But if the IRS believes income was deliberately concealed or a tax return was never filed, the consequences can become much more serious. That is why getting accurate information early matters. A tax professional can review old returns, explain what rules apply, and help determine what steps make sense. The biggest mistake people make is assuming they are automatically safe just because several years have passed. Time alone does not always erase a tax issue. So, what should silver owners remember? First, physical silver is not automatically invisible income. Second, cash transactions do not always mean there is no record. Third, old sales can sometimes create questions years later. And finally, understanding the rules before receiving a government notice gives you more options. The goal here is not panic. The goal is awareness. Many people simply were never told how these rules worked. If you have sold silver in the past few years, it may be worth reviewing your records and making sure everything was handled correctly. because the best time to understand a financial problem is before it becomes a bigger one. Let me know in the comments. Did you know that some silver transactions could still raise tax questions years later? And if you know someone who owns precious metals, share this information with them. A simple conversation today could prevent a much bigger surprise later. Stay informed, stay prepared, and I'll see you in the next video.